When I sit down with a business owner, whether it's to put an exit plan together, prep the business for sale, or put a business valuation together, one of the first topics we cover is the company's historic financial performance and the accounting practices and procedures that are in place with regarding those financials. Having accurate and complete financials is incredibly important to the business's credibility, ultimate bankability, and saleability. Hi, I'm Brent Freeman, and this is the CBB Group. In this video, we're going to cover some of the financial housekeeping issues that Bill and I've come across in the last 12 to 18 months with regarding small businesses and why it matters. So if you're a small business owner thinking about starting an exit plan or prepping for sale, stick around. I think you'll find this video interesting. Process and procedures. So really, when we look at process and procedures with regards to accounting, the first thing we look at is tax returns versus internal financials. The question here is not that the accountant has done the appropriate items with regards to the tax returns, but do your internal financials match your tax returns? Now, we've seen in instances where they can be off $100,000, $200,000, which is an issue and will need to be addressed not only in the exit planning, preparing a business for sale, but evaluation as well. And it really usually comes down to the accountant or the making GL entries at the end of the years. It's normal for an accountant to take a look at an individual's or business's tax returns and make some adjustments, either moving things into cost of goods, taking personal items out of it. If it's an S corporation and you're making charitable contributions, moving that to your personal tax returns. So it's really a process and procedure issue, squaring those two items up so that they come close. We've probably seen less than 2 or 3 times in the last 4 or 5 years where they balance to the penny, and we don't expect them to, but making sure that your tax returns and your internal financials match fairly well. The second issue with regards to process and procedures is month-end close. We've had situations where businesses have not closed their books for up to a quarter or even a half a year. Now, obviously, when you want to make sure that that's done, preferably by the 5th or the 10th of every month. But do you have a process and procedure in place to get your books closed and keep them fairly accurate in a timely basis? And so that's when you're doing taking a business to market, it's really important that those books be closed as quickly as possible. Obviously, putting a exit plan together, that's an item or a housekeeping issue you'll want to address. And then the last one is balance sheet. Most small business owners are really good at putting the monthly profit and losses together. When it comes to balance sheets, that's not usually the case. So if you're a manufacturer and you've got a bill of materials, or what's known in the business as the BOM, the balance sheets need to be updated and kept current on a monthly basis. Inventories are another item that can be fairly significant. I just had a business that had $10 million in revenue, about $1.5 million in inventory, and they hadn't done a physical inventory in over 5 years. Their inventory in the yard, like I said, was about $1.5 million, but on their balance sheet it was $150,000. On the tax returns, it didn't reflect them as well. So that's a tax issue It's also an issue that, if not corrected, when you put together and negotiate a letter of intent, working capital components put in, and having accurate balance sheets allows you to calculate that working capital and then leave a reasonable amount of working capital in the business. So, very important issue. Process procedures, tax returns versus internal financials, month-end close, and balance sheet issues. For small businesses with revenues less than $1.5 million, you may want to consider looking at the cost-benefit analysis around outsourcing your bookkeeping. An owner-operator that may spend 5 to 10 hours a week doing the accounting that makes between, say, $200,000 and $250,000 would probably be better off outsourcing that service for between $50 and $70 an hour. The benefits really are that your financials will be closed on a regular basis, usually by the 10th of the month. Your balance sheets will be kept consistent. Payroll will be outsourced as part of that, where your federal, your state, your local reports and fees will be paid and done correctly. And it's probably cheaper. Again, for a business owner that's making $200,000 to $250,000, it's definitely cheaper to have those that service done and outsourced, and it'll give the owner more opportunity to work on the business rather than in the business. So in this last segment, we really want to just address why it matters. Now, over and above the obvious point of having accurate financial data to make prudent and business decisions, it really comes down to, as far as exit planning, especially for preparing the business and taking it to market, credibility. When a buyer looks at a business, making sure you have all your T's crossed and I's dotted with regards to your financials really is a credibility issue. If they don't find anything, or if your books are in great shape, that really gives a buyer increased confidence in the ability of the business to perform and leads to increased saleability and may actually help you in pricing the business. The other thing that we can't stress enough is really the working capital. Where working capital is concerned and negotiated in a letter of intent, having accurate books in order to make current and correct working capital calculations is imperative to not only the buyer credibility and saleability, but also in how much you as a seller will get to keep when the transaction's completed. So it matters. This is one of those items where just good process and procedure will help you make better business decisions with current financial data, as well as increase the business's credibility and hopefully saleability of the business. So I hope you found this video helpful. Financial housekeeping, process and procedures for your accounting is really important. It's not a big sexy item that a lot of business owners pay attention to, but it obviously leads to increased credibility, saleability, and critical data for you as an owner to make great business decisions. So again, I hope you found this video helpful, and we'll see you in the next one.